Very impressive day and exciting close to the weekly, monthly, and quarterly major timeframes. The statistical backtest from the triple witching is starting to prove correct, and we closed the after hours trading with a 4-hour bullish engulfing candle formation. What does that mean? Typically some more upside. Welcome back to the channel on this happy Friday. This is ARCa, and let's dive into ticker symbol FNGR. Let's kill. What is up, you guys? Thank you so much for stopping by once again. Let's dive in to ticker symbol FNGR and find out what could be happening for the coming sessions. Well, today, team, was absolutely an exciting day with a massive after-hours closure at $6.32. I must say that we actually did talk about the pullback that, for the $6 target. So if you were one of those that was around for the live stream and caught that announcement, then you definitely got yourself a very, very impressive entry. So here was the $5.99 target that we just averaged to $6. And if you take a look at your OHLC values up here, that's the open, high, low, close. Let's hover over that candle and take a look at that low on the L, right? $6, dead on the money. And we actually got a really nice recovery from there. So if you were able to catch that $6 bottom, right, you are currently up 5.45% actually. So that's looking pretty good already starting, right? So let's go ahead and observe here what's going on with all these little tiny numbers and lines and stuff, right? So this is one of the ARQ algorithms that we just released, and it's part of the introduction that you just saw. And this algorithm particularly takes measurement of every single candle closing upside of the EMA 13 and every candle closing below the EMA 13, the EMA 13 represented by this white line, right? So what does that do is that it gives you a relative strength right up here. So it's showing you that in the hourly time frame, the bulls are leading the way with 64% over the bears at 36. And as you can see here, as we move up the time frames, those values change, right? 59% bull strength here over the bears at 41 on the bi-hourly. We have a 54% lead on the 3-hour time frame, but let's see what the 12-hour has to say, right? So 12-hour time frame, yeah, the bulls are still in the lead and looking very strong thus far. Okay, so yeah, very impressive upside today, leading all the way up to that 678 high. And we were observing this potential upside, right? But this is really it is absolutely parabolic. Now, speaking of this upside though, let's go ahead and take a look at this. So this is the quad witching, or otherwise known now as the triple witching, since they removed the individual stock options from the quad, right? So I guess from now on it may be just triple witching instead of the quadruple, right? So that's when all major options and contracts expirations are due on that Friday, right? Of the I think it was a Friday the 15th. It usually ends up around there, right? What was it? January, March, September, December, or something like that, right? Those are the quarterly pivots. So what you're looking at here is a back test that I performed of the this was actually in the weekly time frame, right? Like this, and we marked off every single time that we actually closed, or what happened after the quad witching or the triple witching, right? So you're going to notice here that we have 27 iterations here, dating all the way back to let's see, I think we took measurement. Yeah, it looks like we took measurement all the way back to July of 2020, right? So we definitely have a few years in there, and the upside iterations from those quad witchings were 17 out of the 27, which gave us 96% probability that we would be facing an upside from this last September 15th quad witching or a triple witching that we just got, right? So just a couple weeks ago. And I also ended up measuring the parabolic upside. Well, actually anything that had a more than 100% upside, I measured, right? So 9 iterations of the 17 had an upside that was greater than 100%. And 4 out of the 9, we had a parabolic upside that led to beyond 100% moves into 400%, into 1,000%. This is 1,400%, right? So now that gave us a probability of facing a parabolic upside of 58.82%. So, and it looks like we are in that process now, right? So the statistics are playing out pretty nicely here, and even you know what, we even actually took one of the iterations back here, and we noticed that we had a minus 18.78% move following the announcement, right? So after that move to the downside, we actually started to create this massive run to the upside that eventually led the price action to around 988 back in October 2022. So what's curious here is that we applied that example to the announcement here, and we applied that 18%, almost 19%, and it looks like we floored right at that 19% or 18%, and then we started this massive upside. So yeah, the statistics are proving pretty nice here, and it is following trend, right? So the upside here is still more probable than not. And now, yeah, so let's go ahead and take a look at this here because this is very important, team. First of all, we were able to determine the upside based on the break of this channel here. Very simple formation, very textbook breakout, very normal for us to do. Right, the upside target of $5.92 and $5.99, aka $6. That was all determined by the price objective from the formation itself. And the way you acquire that is by taking a trend line from the top side of the formation all the way to the bottom side, and then you apply it to the first candle that has a clean break or a clean close upside of the newly converted resistance into a support, right? So that would be this candle here. So when we apply that trend line there, that was disclosing a target of about 592. We ended up reaching that yesterday by market close. Yeah, after hours close, we ended up getting that 595, and then into the early pre-market or the pre-market today, we ended up reaching the 595 or the $6 target, right? So the entire thesis played out right on the money, right? So that was a very good thing to experience here. So yeah, and then we were able to talk about this potential pullback here, all the way down to the $6 mark because it's a psychological target, right? So meaning that we broke the $6 mark, it would be okay for us to come back down and validate it or confirm it as a valid area of support before a continuation onto the upside. And another thing that validated this upside was the SMA 50, the 50-day simple moving average here. We got the first candle close upside of the SMA 50 without any wick to the downside like these prior candles, right? So that's how we were able to determine when to enter, when to when to scale up, and when to size up, and that whole thing, right? It was just a whole process. So congratulations to you if you were able to catch entry here, and yeah, and a lot of us ended up taking some of that profit right up here, right? Waited for the pullback. A lot of us got re-entry down here. I'm going to be fully transparent with you. I said that I wasn't going to try trade shares, but I in fact did. I opened up a small position. Right at about 617 here, and we're currently sitting at 632. But congratulations to you if you did catch that $6. Man, I was just caught up with my little boy, and he was opening the fridge, bringing out the lemons and stuff into a little basket, and then he left the fridge open, and I didn't notice. Right, so these were the last 10 minutes of trading. I'm trying to get the position here, or the last 20 minutes of trading, whatever it was. Right, I'm trying to get the position there for $6, and I totally missed it. Trying to mitigate what's happening here with my boy, right? So it's all good. Still caught an entry right in the low sixes, but I guess we'll see how that's going to perform in the coming sessions, right? But just know that I did not open full exposure whatsoever on that. It is a minimal position there. And okay, so let's go ahead and take a look at this here. This is the bi-monthly chart. And the reason why I'm showing you the bi-monthly chart was because this is where we determined that that we were highly likely at a bottom side before a V-shaped recovery, right? So that V-shaped recovery, wow, ended up printing a three white soldiers formation, candle formation, right? So this is why that the title of the three white soldiers with literally the three white soldiers on the image that I created, a couple weeks back. That's the reason why I named it that, right? Because we got this macro three white soldiers formation that usually leads to a continuation to the upside, and it is a confirmation of it. And you can see right here that this is the bi-monthly. This is the bi-monthly, the newer candle, right? Uh, wow. So this was actually around 3 weeks ago, maybe. I don't remember when it was, but yeah, we're continuing to the upside. Is my point. All right. So it's looking promising. All right. So we're doing good. We're doing good, team. All right. So let's go ahead and pull up the Gaussian bands here and see if there's anything we can pull out of the sky here to see if we have any. Oh well, we do actually. Nice. Yes. So this is the bi-monthly candle actually peeking its head just outside of the Gaussian bands here, which is very good, right? But more importantly, and closer to the immediate short term, is actually the daily time frame getting a very nice close outside of the Gaussian bands here, and know that the last time we closed an outside candle outside of the Gaussian bands was actually on September 15th. Remember that date? Yes, you do. September 15th is the triple witching. And from there, we started reaccumulating. I'm sorry, we started distributing before reaccumulating, and we're still in that reaccumulation process right now. And we officially closed the daily candle upside of the Gaussian bands for the first time since then. So this is absolutely good for the asset. Let's look at the bi-daily time frame, or any other time frame for that matter, to see what we have going. Okay, so the 8-hour time frame here is actually peeking its head through that Gaussian band resistance, and I can only suspect that this would continue to the upside. And take a look at this 12-hour Gaussian band touch. We're right at the resistance of this, knocking at that door. And not only that, is that this can, I mean, uh, no, I'm not. You know what? I was just gonna say that these are. It's just a nice formation here, right? Three green candles, looking very nice. Right. So let's go to the 3-day time frame. See if there's anything there for us. I suspect that we're way above it. Okay, good. Yeah, nice. Let's see the 5-day. Nothing there. Okay, nothing on the weekly. And here's the bi-weekly, right? Getting that resistance touch there, and we just yeah, we just got the closure of the bi-weekly too, and we are now looking pretty good. Monthly time frame, yeah, we already talked about that. Let me take a look at this. Yeah, we're peaking straight through the resistance here. Looking very good, team. Let's go ahead and move on to the next chart and see what else we have. Right. So check this out. This is my reversion variant algorithm, right? It's paired with the Bollinger bands, volatility bands, right? And we were observing this the last couple of days because we were already knocking at the door of this resistance levels, and speaking of the high likelihood of combating it. But look where the mean is now. Check out the mean at 592, and that absolutely rhymes because that was our target, 592, right? So I mean, likely the mean, right? So what I'm saying here is that upon the retracement that we faced today to $6, it technically came back down to test the mean before a continuation to the upside on the shorter time frames. That is. So, but yeah, remember that we're closed at 632 by now, right? So the daily time frame does not display that for you. The 12-hour and below will display the after hours trading, just like this. You see? Yeah. So yeah, team, that is very curious that we were getting those targets to all line up as nice as they are doing, right? So now I do have to say that we have a good shot of making I mean, a touch of the 708 right at the 4 spot 618 here. Let's just give it a range, right? It would be 688 to 708. But yeah, I do think that we have a pretty clean shot at it, and it could be in the following sessions, right? So I just want everybody to kind of practice patience here and make sure that we're just not blindly FOMOing into this, right? Because that's what you're going to start to see if the price action, and that's a very strong if, right? If the price action continues to rally the way that it's doing, you're likely going to see some extreme FOMO into this, which is going to increase the danger here. But statistically speaking, the top side here, and let me go ahead and take a look at volatility. Yeah, we're still within the play right now. We have an upside pivot on stochastic momentum. We're decreasing all that pressure on the daily MACD. We're about to get a bullish crossover, and let's go ahead and minimize this just a little bit. And okay, so the ADX is now sitting at 19.5% with DMI plus on top. So we almost have a full DMI support here for the statistical move. And based on the samples, right, that I gathered here throughout the entire trading history of the asset, uh, the first upside target to kind of evaluate here would be 701, based on a 33 spot 40% average upside thrust, aka your mean. Right now, from the mean, I did calculate your standard deviation, which is the 68, which is where 68% of the results land, and that came out to 35 spot 12%. And if we were to kind of put that 35% there, that would lead to a target of about $7.11. I know I said today 7.12, but yeah, 7.11, right? And that's entirely okay. So now, the upper bound of the standard deviation, of the first standard deviation, sorry, being right up here, that is leading to a 68 spot 52 percent upside, right? So that is leading to a very curious target of 884 to 882, meeting the 2 spot 618 geometrical mean. So now, just to not get it confused, please listen to this. I am talking about a target all the way up to the 884 realm. That means that we have to evaluate every resistance, historically speaking, as we go up, right? So it's just telling us that we have the potential to reach up there, even though it's considered the lower probability targets because it's in the smaller side of the distribution curve, right? The 68% of the results are more likely to reach. And in this case, we already did one time from the firing of the signal from contraction, right? So that's what we're doing here, is that the signal is from contraction to expansion with an upside pivot of the both the EMA3 and the SMA14 of the stochastic momentum. So now we're leading into the final chart here. This is the 30-minute RSI. Actually, that's the 10-minute here. Let me pull up the 30-minute. Yep, the 30-minute RSI is actually facing resistance from the SMA14, but guess what? This is in the gravitational zone of the bull weakness percentile. Highly likely for this to get pulled to the upside in the short term. It looks like we may actually face a little bit of a pullback in the bi-hourly time frame, so a little later in the morning, as this would actually face the gravitational zone of the overbought percentile, right? It'll essentially just come back down and use the SMA 14 and the previous zone's gravitational zone for a push to the upside. Very nice position here for the 4-hour RSI, as it has not only both of the SMA 14 represented by the pink line and the RSI signal upside pivots, but also that the signal line is right within the gravitational zone of the bull strength percentile, giving it a higher likelihood for a continuation to the upside, of course. And yeah, this is a little bit of consolidation here on the 8-hour time frame. Let's see what the 6-hour says. 6-hour still with a bullish outlook. 12-hour time frame with a potential, with a slight danger there, right? So if I can put any type of guess, it's that we may face a little bit of resistance at the 650 level, and the 650 level we know of directly because of the I don't know if I still have it here, right? It's close enough here. It's actually the 1 spot 618 in the shorter time frame, but here, 640 to 657 is the 3 spot 272 and the 3 spot 618. So this is the reason why I'm saying that we may face a pullback from this area here, as it's natural for us to pull back from the 618 targets, even the 272 targets. Okay, so now let's see here. We have a daily time frame. Very nice. As you can see, we actually got pulled from here right in the after hours. So this already worked, right? So very nice. And the bi-daily time frame as well. This also got pulled in the after hours. So did the 3-day and the so did the 5-day. In fact, the 5-day already has succeeded the upside of the SMA 14. We just haven't seen it yet because of the after hours trading. So we will likely see this upon market open on Monday. Okay, team. So Yep. Now you know. Now you know the targets. Now you know the play. If any questions, go ahead and get in touch with me. If you're still here in the video after all this time, congratulations to you and thank you so much. Please remember that I am. Uh, it's hard to say it, man, because I really wasn't planning for this, but too many emails with a lot of people facing some losses. So I am opening up enrollment again for the ARC Masters course. So go ahead and get in touch with me at arcmasterscourse@gmail.com, and we'll go ahead and talk and get you enrolled. I'll give you all the details. Okay, team? But yeah, please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be cool. With that said, team, I wish you well a very, very good rest of your weekend or start of your weekend, and I will catch you at the bell on Monday. Adios. Yeah.